This is an update of the Emini Standard & Poor's futures charts. As we can see, this uptrend line that we were following the last couple of months was crossed below on the last 3 days. The make or break resistance didn't allow for a continuation to the on the 1450 target, and when we saw that, the chart become neutral from uptrending. So this trend line make the effort to give support to the Emini futures. So we can see as the futures become neutral, we can assume that the first target for a continuation of this downtrend, this could be only a counter trend of an upside movement. This would be 1372 as the secondary target. The main target was approached and fulfilled last Fridays, and if this becomes only a counter trend down movement as a pause in this uptrend, we have a 67 probability of a new high. What's the problem then? The problem is clear. As we stated last week, the final target for the continuation should cross over the highest level of the previous week. As we saw that, we could speculate at that moment that we were on for a major reversal and a continuation to the upside, but we need confirmation at least 1 week over this level to the 1450 level to confirm this break of this level that could give us the chance to continue to the upside. But when that didn't took place, that factor became lethal to the possibility of continuation to the upside. The weekly chart remains neutral, and we have only a 29% probability of a new low below the 1250 mark. But when we see this chart, we can assume that this was an ABC actually, and not an impulse. But at the same time, in this scenario, if this coming week, the debility continues, we could speculate that this was a next wave, and from now on we could have a 3 down movement that could be lethal to the upside possibilities. So we can see that the Emini chart is weak. We have a sell signal on Friday that will be confirmed next week if we cross this low of 1381.75. If we cross that level to the downside, we are on for a choppy ride to the downside with a sell signal confirmed and a primary target of 1350. And this is the ETF of Standard & Poor's. As we can see, the important downturn line that we have here sustained the ground and couldn't be broken. We had a false breakout on this bar, but at the next day the downside movement was extremely strong, and this Friday's bar became neutral. So we are no longer in an uptrend apparently. We have a 63% probability of a new max, but if this sell signal we have here on Friday that is confirmed, if the ETF crosses over to the downside 138.45, this movement, this sell signal will be confirmed, and we have again the 135 level target. So this trend line triggered a downside movement. If this sell signal confirms, we are for a choppy ride to the downside and a complicated movement. And as we can see, this movement is still the same. We have our downturn line on a weekly chart, and if this weekly chart sustains the upward pressure and gives room to a continuation to the downside, we are complicated again. The only hope we could have is that if we accelerate to the downside, the 125 level could sustain, could act as support, at least in the short term. But this week will be crucial, since if it consolidates the downside movement we saw last week, we could be in a major continuation to the downside, and this last movement could be only a next wave to give room to an ABC on a continuation of the correction, a very dynamic ABC. So Monday and Tuesday will be critical to see if we can accelerate the pace to the downside, or if we could expect to be resistance to the downside.